Robschild. No investment advice. Welcome to the show where we view financial markets through crystal ball gazing. Today is Friday the 13th, September 13th, 2024. Today's episode, markets buy/test the bull. I buy more puts. Last chance to short, in my opinion. Next Wednesday, the big Fed decision. We today moved apparently back to a basically 50-50 chance between 1 and 2 cuts. Not sure why that happened. The consumer sentiment report coming out actually came on stronger than expected, so that was a bit of a surprise. That might be why the markets were able to sort of test the highs. We'll get through the charts when we get there. Daily reminders. 2-year, 10-year Treasury yield curve was inverted for over 2 years. This is like the biggest alarm bell ever. This has never happened since right before the Great Depression, suggesting we may be headed into another Great Depression. We recently had reversion, which is usually right when it starts, the worst stuff. So on September 6th, we are no longer inverted. This is when the bad stuff usually starts. Also, the SOM rule was just recently triggered, meaning unemployment has been going up at an unsustainable pace, suggesting the recession has actually already started. The S&P 500 is sitting at a PE ratio of 29 without major earnings contraction, also without very low Treasury yields. Treasury yields are high, if anything, making the current price of the S&P extremely expensive, setting us up for the crystal ball reading, which I suggest the market crash continues. I mean, I guess I can't say it's continuing anymore. I guess I need to erase that part. But I still believe that the market crash is coming here very, very, very soon. And I am on the side that I believe that the Fed will not cut fast enough to save the economy. I believe we are headed into disinflation, deflation. On to the charts. This is the SPX, S&P 500. As you can see, we had another green candle, which surprised the heck out of me today. I'm very bearish on this. I think it's highly overvalued, but Mr. Market is buying the bull, as I'll put it. It's possible for the wall of worry to continue higher, but I personally would never bet on that. I am betting on the opposite to happen. I've been talking about there being sort of a head and shoulders top. It's looking more and more like, if it's going to be a top, that this could be what's called a double top. But again, if we close above the previous high, I don't know, the wall of worry may continue up, as one of my commenters said recently. We're going to 6,000 next. It's possible. And for the people that want to gamble their money and play games, good luck to you on that. We're headed straight into a slowdown, and the S&P 500 is very, very overvalued based on the amount of money that it's earning. I personally believe that the S&P 500 is a very poor investment right now, but I don't control other people's money. I don't control what other people do with their money, and so they can play games with each other until they run out of steam and things eventually get back to normal. As I mentioned in a few episodes ago, Benjamin Graham famously said that the markets are a voting machine, not a weighing machine. The markets don't care how much things weigh. They just they vote on what things are worth. They don't weigh them. But over a longer period of time, eventually the weight actually matters. That brings me to another little idiom talking about the sardines. I looked it up because of Lynn Alden talking about it in her recent article. Apparently there's an old adage of sardine can being traded amongst traders, and they keep bidding up the price higher and higher and higher, and then one person finally gets it and opens it and eats and smells it and realizes that the sardines are rotten, and his friend says, "Hey, no, those sardines aren't for eating, those are for trading." Suggesting, really emphasizing the point that there are games that are played in financial markets. And I prefer to do things that I think are intelligent investing. So it'll be really interesting to see what happens with specifically the S&P 500. Another look at the S&P 500. These are weekly candles. CNBC, I think, had a headline today saying that it was the best week of 2024 for the stock market. Right after, by the way, they didn't forget to mention that it was following the worst week of all of 2024. So, I think it might be a good idea to take that with a huge grain of salt, but it's looking a lot more bullish than I thought that it had in it. And so, I hate to admit it, but, it can continue higher. Again, I think this is gambling. I don't think this is investing, but that's just me and my crystal ball. When we take a step back from the S&P 500 and start looking at other markets, we do not see the same kind of, almost all-time high again, like double top kind of a thing. Nowhere near it. In fact, the SMH, what I've been talking about, is the potential biggest bubble AI right now with the semiconductors. I'll add, yesterday I mentioned how I believe that the housing market is in a bubble and the AI market is in a bubble. One other way to look at both of those together, what I'm thinking, and other people have said this, financial crisis plus .com bubble, all at the same time, right? Housing has never been more expensive compared to median incomes. The S&P 500 is obscenely expensive, largely due to the semiconductors. This whole thing that everyone thinks that AI is going to somehow make infinite amounts of money. It's the same hope people had for the railroads in 1929, right before the Great Depression. But I digress. This chart here, the head and shoulders top is still fully in play. Same thing in the NASDAQ. We are still very much in this head and shoulders top, and even more than that, we actually hit a very major topping trend line from the top of the head to this recent top of the right shoulder. We touched it like perfectly today. This is such a obvious pattern here, and so we should expect at least a bounce off of this line if it's not just a top here that sends it down to my target to break the neckline. Interestingly, a pretty similar pattern actually in IWM. I haven't brought this chart up for a while. The Russell 2000 small caps, we just kissed a line, the same thing, where the top was in the NASDAQ to the shoulder, hitting that same exact line today. I've been bringing up the VIX every day because I think it is still very important to note that the October contract is still elevated past the following 2 months, suggesting that the market does expect more volatility going through September into October. But for now, the VIX itself, it's cooled off. It's all the way down to 16.5. If you watch Verified Investing, the Mavericks show, really good show. There's a really good trader on there. He's describing what he sees in the VIX right now as very dry tinder. He thinks that, as this sits here low while we have everything going on, like the way everything is lining up, and if you've been following the show, we've raised rates to be restrictive for a really long time, and we're starting the first cut literally next week. It's just setting itself up for a huge explosion here. So that adds to my sentiment of believing that today may be the real perfect day really to short for any interest in trying to make money on the way down. I mentioned yesterday TLT looked like it wanted to start going sideways, and that's exactly what it did today. We just basically went straight sideways. I haven't brought up the CNN Fear and Greed Index for a while. It had been in fear for a while, and we've recently, today I believe, just went into neutral. Yeah, so the previous close was at 43 in fear, and now we are in neutral. Mr. Market in his jalopy is speeding away from the chaos with a few drops of gasoline left in the tank. With treasury bonds going sideways, junk bonds jumping higher today. So credit yields tightened. I am astounded. I bought more puts on HYG today. I believe this is an easy place to be to potentially make a lot of money. The way that I see it, all roads point to credit spreads spreading. All roads lead to junk bond yields rising here. I seriously want to meet the people that are buying junk bonds right now at this part of the cycle. Who are you? Who are you? And why are you doing this? I don't understand you. Please leave a comment. That was HYT. This is HYG. Same thing, same basically. They're all junk bonds. Just, going up here. I don't think that's water in Mr. Market's water bottle while he's flying down the highway right now. But that's just me and my crystal ball. Bitcoin finally buying a little bit of the bull. It seemed like it was a lot more hesitant than the other markets recently, but today we had a pretty large day up 3%. The way I look at it, just taking a look at very basic trend lines, if you take these two recent highs, looks like we might be reaching up to this line. I don't know. I currently have zero exposure to Bitcoin. I think this is not the right time for risk assets. Also, altcoins, the dumber of the dumb money, I guess, is kind of what I call it. This is all cryptocurrencies minus Bitcoin, getting a little bit of a bid here today too. Nothing too crazy or exciting though. While a lot of markets want to participate in the bull and want to are buying the bull a little bit here, oil is still not buying the bull. Oil is clearly subdued here. This does not look like a bottom or a bullish pattern. It looks like we're still headed lower here. You do have to have respect for oil. It directly represents usage of energy, which, when people are consuming more gasoline, more energy, that's economy's going. When oil's going down, people are just we're not using as much oil right now. It's going down. This is one of those more real markets that Mr. Market doesn't control as much. It's really the real economy that controls oil more than Mr. Market, in my estimation. I see it as a more trustworthy place as to where things may be headed. I wanted to mention silver recently just had a pretty big rally as well. Obviously, in the past few days. Today we went up another 3%. Looks like the day before we went up over 3%. But we just hit this similar looking trend line that we're seeing across many charts. And so I see this as a potential, again, like I said in the intro, this could have been like the last day to short. If it goes up in price here, well, good for you if you have silver, I guess. I'm cautious about silver right now. I like certain precious metal areas, specifically like palladium, REMX, rare earth metal miners themselves seem to be suppressed in price, especially compared to gold and silver. Silver is not like looking really cheap on a historical basis, and it's also largely an industrial metal, and so there's more risk in silver than I'd be willing to take myself at this current point. Last chart of the day, wood, also similar pattern where we have these recent highs lining up with each other here, suggesting to me that this could be a top here. But if we break through this and confirm with all of these charts that we're looking at, Yeah, Mr. Market apparently has a few more drops of gasoline left in his tank than I thought. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.